And those real estate investment trusts have had a pretty good year, outperforming the overall market. These high dividend paying stocks are taking advantage of low interest rates and investor desperation for yield. Diana Olick has that story.
Apartments, warehouses, offices, even retail malls. Commercial real estate is climbing out of the recession with a vengeance.
I cannot remember a time when you had such a confluence of strong real estate fundamentals, relatively disciplined supply, good demand, and accommodative capital markets. So from a fundamental perspective, we're really relatively constructive on commercial real estate and institutional quality commercial real estate specifically.
U.S. equity REITs are up around 15% year to date with a dividend of about 3.5%. Compare that to the S&P 500, up around 4% with a dividend yield of 2%.
Low interest rates are positive for REITs because they really offer investors an attractive yield alternative relative to treasuries or fixed income, and you have a growth characteristic to that dividend yield, that will go up and increase versus kind of a fixed return over a period of time.
Apartments are still a top pick despite concern last year of overbuilding. Avalon Bay, Equity Residential, to name a few, fueling the 25% year-to-date jump in this REIT sector. Freddie Mac reports the supply of new units is being absorbed. They point to nearly 4 million potential households that weren't formed during the Great Recession. Over the next decade, close to 500,000 rental apartments may be needed to meet that growing demand. Office is still mixed as employers are hiring but downsizing their workspaces. But even retail malls are starting to get some love after underperforming other sectors.
The good results, both GGP and Simon put up a beat and raise quarters, and I think that sentiment will start to come slowly back towards in favor of the mall stock. So I tend to believe that they will work well in the second half.
After such strong results in the first half of this year, analysts are not banking on double digits for the second half because the biggest risk to all of this, of course, is rising interest rates. For Nightly Business Report, I'm Diana Olick in Washington.